Some movers and shakers in the mid-cap market today. It's been quite a day for Lakshmi Vilas Bank. Stock opened 5% higher and now is lower by 1%. So it's been quite a turn of events. They've, of course, raised 450 crores through QIP, but there are denials coming in from a couple of names which were sort of rumored to be interested in taking over this bank. Anyway, that stock is at the lows of the day. Watch out for some selling on Arvind as well. Arvind is down 3%. Vodafone Idea, for obvious reasons, the downgrades that have been doing the rounds, down about 5%. So there is a lot of profit taking in the mid-cap market as well. The mid-cap index is down about 0.5%. On that note, let's bring you some more trades. Sandeep Wagle is with us now. Good afternoon, Sandeep. So it's a little mixed today. Are you on the long side or the short side?
Afternoon, Surbhi. I think it is more stock specific. Some mid caps are doing well. I have two buy calls. The first one is a buy in a Godfrey Phillips that has given a clear breakout. Stop loss of 1112, target 1161. And the second is a buy in a PVR. Stop loss 1683, target 1773. And both the calls are for today and tomorrow.
Okay, fair enough. Sandeep, thanks a lot for those trading ideas. Mr. Tulsian, your thoughts on this big rally in oil marketing companies, and what would be your preferred pick? IOC has underperformed. HPCL, of course, has been the best performing stock. I'm looking at the monthly change. What at this rate, 28% on HPCL, 21% on BPCL.
See, Anuj, in fact, we have been taking this positive call on oil marketing companies. We were not keeping positive bias on the oil exploration, but I think that now oil marketing companies seem to have picked out the way, again for the short term, again the way we have seen for many of the banking stocks. And in fact, if you see the strong rupee and softening crude, I'm not saying that crude has fallen, but it has started softening. The Brent having moved to a level of 68 now, maybe ruling at 66, 68 and a half. And rupee having strengthened to about 68.50 is seen to be highly negative because if you really go by the first, if I take the call on the exploration, obviously they will be seen loser on the net basis, lower realization. If I come on the oil marketing companies, actually the thesis or the theme of taking a positive call was largely on the inventory gain, because now they are not losing anything on the marketing. They are seamlessly increasing the increased cost of the product to the consumers on a daily basis. And now probably this reduction in the prices of the petrol and diesel again will start. So they were seen unaffected on the marketing front, but the inventory gain will now seen getting softened. As I said, that because of the strong rupee and we are softening crude prices, softening Brent prices. So I think that now the cycle seem to having peaked out. And if you see maybe even the IOC factor, because the OFS is not going to happen now. And if you take the call, the rise which you have seen in BPCL, HPCL to the extent of 25-30% in last 1 month is bound to see the profit booking come in, because people will start hunting the ideas in other ones. So I'm in fact taking a cautious call on all three oil marketing companies and won't be surprised to see them correcting by maybe about 5 to 8% in the next couple of weeks or so.
Okay. All right, Mr. Tulsian, now we will thank you on that note. Thanks for being with us, sir. We'll catch you with the markets again tomorrow. Right now, it's time to bring in our...
Before that, just, I just wanted some more thoughts from Deepak as well, since he's waiting by the... Deepak, your thoughts on names like Eicher Motors, which have again started to correct a bit. How do you approach them?
I think Eicher is interesting because the price has corrected substantially. I would have liked a price of 18,000 around. I actually haven't seen the price recently, but so a couple of things there is, I think they're coming out of the strike-induced production damage to a point where I think they've reached some layer of saturation in terms of market penetration, and the ability to sell more than 75,000 bikes a month is looking a little suspect right now. Also, that's the limit of their production capacity, maybe a little more than that is where the production capacity is. So there is competition coming today. We're talking of Java. Of course, that may not be very big competition right now, but still. And there's also Harley Davidson that's looking at a deal in India for higher end bikes. I don't know whether they'll partner with Eicher or will go with a different partner. That might change the fortunes either ways for the company. I personally feel here that we've reached a layer of saturation with the larger bikes. which some of the new bikes, although there is initial interest, may not necessarily see a massive increase. And I haven't heard of many large capex plans in terms of increasing capacity from the company. So I would have to give it a much lower PE ratio than the the 50s and 60s that it used to get in the past, and perhaps more meaningful, comparable to the Heroes and the Bajajes, which are trading at sub 15 PEs. I think the two-wheeler market has a long way to go, but this is slightly higher end and not exactly super high end. So they fit in a niche which has worked very well in the past. It's going to be interesting to see how their 600 plus cc bikes take off. Don't want to buy at this price, at least not about 18,000 at this point.
So since we have touched autos, I must ask you about this. Maruti sub 7,000 once again. Deepak, are you buying?
Yeah, we have been buying, Survi. It's probably looking like more like a contrarian call right now, but I continue to feel that in the longer term, India is going to be more about I was going to see a lot more demand in four-wheelers than we are currently. We've seen a cut in demand. A large amount of it is price increases coming, some from the insurance impact that was from August last year, some from raw material increases, and also then the government has imposed a lot of these taxes above certain levels and so on. So I feel personally that Maruti is one of the better stocks in this area because they cannibalize their own vehicles, in the sense they're not afraid to say, I have 3 cars at the 7 lakh price range, all of them compete with each other, and we're going to still grab a significant share of that market. It may be one of these 3, but I don't mind cannibalizing, say, a Sia's market share with another car that's in the same space. I personally feel that's a good strategy in India, and they rule the lower end of the car ecosystem. Lower price end of the car ecosystem, and I feel that is going to continue. If you look at tier 3, tier 4 towns, there's still a very big aspirational value in owning a car, and Maruti is one of the few people who actually have showrooms and service stations almost all over the country. So long term, I still am positive on it. Prices, maybe they were a little bit high expectation wise. I think next 5 years will change that equation. These prices are still quite okay for us. So happy to be a buyer. We are biased in that respect. So take my advice with a pinch of salt.
All right, Deepak. Thanks a lot for joining us today. That's the word from Deepak. Now let's move on. Basant Maheshwari is with us from Basant Maheshwari Wealth Advisors. Basant, hi, good afternoon. Thanks a lot for joining us. Now, the last few days, just telling you perhaps not to listen to consensus too much. The consensus about 1 month back was that the market will make some kind of bottom ahead of elections, and then we'll have a big rally post-elections. And the market was in no mood. It's already started to have a big rally. Is there a risk of reverse happening now? The market actually making some kind of top before election, and then perhaps not too much left after election?
Good afternoon, Anuj. You have to look at things in a perspective. The foreigners were not buying for the last 18 months. They were just waiting for the elections to come in and go. And what happened after Balakot, they got a sense that Mr. Modi is going to come back. So why would they wait till May 23rd? So I think the screen right now has become an EVM, and it's going to tell you that the present government is going to come back. And I think for foreigners, normally they put in $15-20 billion every year. If you look at it on an average, if you take the average for the last few years, and because they've not put in that money, they wouldn't wait till the night of the 22nd of May to put in the money. So I think 60-70% of their allocation will get in right now, and that's happening. And I think they're taking to the market like thirsty camels in a desert. So you look at the screen and you know who's buying. You look at the HDFC twins, the Bajaj twins, the frontline names, the more extravagant names, and there's a clear distinction. So when the Indian guys buy, when the Indians buy the local domestic funds, they don't buy the expensive stocks. When the foreigners buy the white skin, they like the expensive names. So I think that party is going to continue, but I think the money is going to come in faster than we think. The market isn't going to fall in a big way. It might show a 100-200 point knee-jerk reaction. I think it's futile waiting for all that, because but on a large scale, it's still the same country, same population, same policy, same politicians, same politics. So I think nothing's changed in India, just that the guys who want to put in money, they're doing it at a faster clip to our liking. And mind you, Anuj, I think all bulls right now have become either frustrated bulls or sad bulls. They want the market to go up, but they don't know why it's going up.
That's really well put. Bulls are either frustrated or sad, or maybe both. Unless they really gotten at the right time, and you've been advocating, of course, buying in even in the the gloom and doom phase of Jan and Feb. But what you're saying is that you're not giving credit of this market rally to Mr. Jerome Powell. You'd rather give it to Mr. Narendra Modi. My serious question being, if it's just pre-election buzz, then does it run the risk of simply fizzling out come the 23rd of May?
I give the credit to the Indian Army, Surbhi, not to the politicians, not to Imran Khan, who from a fast bowler has become a leg spin googly bowler, and he's lost all respect in front of all Indians, people like us who looked upon him in the 80s, and I dare say he's lost all respect. So that's another story for another day, as somebody would say. But if you think that the entire market is going up just because the Fed has indicated a liquidity easing policy, what was there that changed on the 27th, 28th of February? Nothing. I mean, the foreigners got a hint that the government is going to come back, and you take your bet. If you look at the, betting market, I think the BJP is right now riding with 250, 255 seats on an even basis. So you have to keep one eye there. And we've always maintained that last year it seemed that the screen is telling you you have to Mamta-proof your portfolio. But I think now the screen is telling you it's you have to go with Modi as the next PM in India. And that's what it looks to be.
I completely take your point, Basant, on on Imran Khan and politics, but that's a different debate, and we can have it some other time. Right now, of course, and of course, it has some market link. And the surgical strike day was the day when this rally actually started, and kudos to those who actually believed in it and bought it. But now from here, what next? We had a rally, Basant, which started to look like broad-based. A lot of mid-caps were participating. This is even when the Nifty was not rallying. But over the last 7 or 8 days, it's once again been restricted to few stocks, the HDFC twins, the ICICIs of the world. Yes, there's a Titan as well here and there. But once again, the market breadth has started to fall. Mid-caps have started to underperform. Does that worry you a bit?
No, there's nothing to worry, Anuj. You ride the trend, you ride the companies that are doing well. Why should you get worried just because some stock which is not showing earnings is not going up? I mean, I'd be more worried if my stock, which is growing at 35-40%, isn't going up. So there's a complete dichotomy in between. I think it's like somebody just cut the market into half or into 1/4. It's like an apple and a knife coming together. So if you see in the NBFC space, one stock is within 2% of all-time highs, and some stocks are down 60-70% from all-time highs. That tells you that earnings will finally be rewarded. And Anuj, my experience in the market has been, if some stock is not going up for 1 month, 2 months, 3 months, you can make a story. If it's not going up for 6 months, you can create a story. If it's not going up for 1 year, there's no story. It's all fact. So let's come back to what's happening in this market. Companies that are showing earnings will go up, have to go up. They have gone up for the last 300 years of economic history. If they're not showing earnings, there's no need to shed tear on them. They won't. But we think rather that the market has become more narrow. It's become more narrow. And plus, if the present government comes back, I don't think we are going to grow. We are going to grow at 8% GDP. We are still the same country, same people, same brains, same economy. Hopefully, the same ministers, but I don't think that's going to change. But obviously, the foreigners who were left out, or rather intentionally they were not buying for the last 18 months, they are trying to get in lock, stock and barrel. I think they'll put in their money over the next 2 or 3 weeks, which means that the market will be in a sustained bull grip, maybe till mid of April, maybe till the 3rd week of April. After that, it's going to get flattish, but I don't think it's going to fall too much, because every fall would be seen as a buying opportunity.
Okay, that's Basant, stay on. That's an important news flashing on the screen. Actually, it's a big news. This is big win for Essar. NCLAT has directed for the implementation of the Essar resolution plan. Now, this is as big as it can get. 42,000 crore was the bid. What this means is that all the toing and froing is hopefully out of the way, Surabhi. And my sense is, that would mean Now let's just pull out the, even the PSU banks, SBI and PNB in particular, and see if there's any kind of move happening, because there should be. Do we have Ashmit with us, who's breaking this story?
The only, I think, additional piece of information that might be required is, I mean, this is very clear that this has gone Arcelor's way. The only additional clarification that was required was the way this money is going to be split between operational creditors and financial lenders. And, the operational creditors had take claim on a chunk of this money.
No, and I tell you something, this is again another big win for the whole resolution plan which has been going on, Surabhi. I think this is one big achievement of last 2 or 3 years. The fact that you are able to, the banks are being able to recover a lot of the money. I was reading a piece that next year is going to be a big one for PSU banks because of all these recoveries, and the NPA levels coming down and beginning to make some money. But this is an important piece of news which is flashing on the screen, and I'm not surprised that the PSU bank index has actually moved into the green, courtesy SBI, which is of course the biggest one here, and that's beginning to see a bit of a move. Do we have Ashmit with us? We don't have him yet, but that's the information that we have at this point in time. Basant, you have any thoughts on?
I think we have Ashmit. In fact, Ashmit has joined in. So let's just we'll go to Basant in just a moment. But Ashmit, all the details first. Is this finally a done deal at 42,000 crore rupees?
Well, it appears to be the case. The NCLT, in a manner of speaking at least, has given its stamp of approval as far as the Arcelor bid is concerned. 42,000 crore rupees, that figure, that bid seems to have been given a nod. We do need to, however, mention that this is a conditional nod, given as how as the NCLT has provided as the last part of the order that all of these proceedings will be subject to, of course, the final orders. But that's more a matter of procedure. That's more a matter of finality. What this effectively does is that it does give the NCLT stamp of approval on the Arcelor bid. Having said that, the NCLT has gone a step further and said that this, as far as Arcelor's bid is concerned, it can be implemented now. They can begin the implementation. The RP, in conjunction with the NCLT, can begin the implementation of the Arcelor bid. Not just that, the NCLT has also held that even the amount in question, 42,000 crore rupees, that can be distributed between the members of the COC, between different sets of creditors. Having said that, the NCLT, one part where it has carved out an exception is that as far as the bid amount is concerned, they appear to have no issues with that. They appear to have upheld that, given as how they've directed the implementation of the Arcelor bid. Having said that, they've only clarified that the only exception that perhaps can be found could be on the issue of distribution of monies between the creditors. So that's one set of questions that they will be looking at. And that effectively means that they will have to look at distribution between the financial creditors. Stanchart has raised an issue there, and between the operational creditors, whether or not it can be maximized, whether or not a 10% formula for them, which they had proposed at the last hearing, is something that is workable. So that amount, distribution of the 42,000 crore rupees, appears to be the core concern going forward. But the big takeaway is that even as the NCLT stresses on the distribution of funds, in effect what it has done is that it has given a grant of approval. It has given the green signal for the Arcelor bid to go ahead. The Arcelor bid has been given a green signal to go ahead and to implement and to start pumping in money as far as Essar Steel is concerned. What is interesting is that we spoke to some of the counsels for Arcelor. They were clearly upbeat about the whole issue, and they've also said that they will be looking at perhaps a closure before the March 31st financial year closure. So that's something that they could be possibly targeting. But that, of course, is off the record for now. Big win coming in for Arcelor.
Okay, Ashmit, thanks a lot for that. In fact, that's led to a fresh move on the Bank Nifty to see that that's, of course, SPI. Basant, do you have any thoughts on the way some of these issues have been handled? We've had a big rally, of course, on the PSU banks as well.
No, I mean, these things are great, but then let me give you a fine print to all of these. Obviously, it's great for the banking companies because the money is going to come back. I hear, and of course you can get it vetted, that the kind of steel which these foreigners make, the quality cannot be competed by the local domestic producers. So once these, and that's why you found so much of resentment over Arcelor actually coming back into India, and the same guys wanted to buy their company back. But I think this government has handled these things with an iron fist. We used to call Margaret Thatcher as the lady with an iron fist. But I think Mr. Modi is no less. If he's not iron, he's as good as steel for anybody out there. So these things, if you can actually let economics prevail over specifics of interest and vested interest, I think in the long run it's all going to play out. But then a country like India, what we really worry from is the hiccups that we get. For example, GST was good, but we lost 6 to 9 months. But then do we have the vision to see 10 years at a time? Of course we do, but in a stock market, we can't see 10 minutes at the time. That's what hurts. So I think there has to be some balance between making this actually an economy which travels very smoothly and differentiating it from an economy where you have to start and stop and start and stop, because the stock market doesn't look at that. And of course, at the end of the day, since we are all invested in stocks, our vested interests cannot be far behind. It just comes out to the fore sometimes.
Okay, I just want to pull up some stocks. Let's pull up Edelweiss, let's pull up IDBI Bank, Canara Bank. These are the stocks that are flying high on this news. Days high on several of them, because these are the key creditors that stand to benefit. IDBI Bank and Canara Bank, those are the two PSU names, along with, of course, SBI, that have reacted to this piece of news. This is how it is playing out, at least for the time being. That brings me to a larger question on banks. What we are witnessing here, Basant, has been the dream, private bank rally. Corporate banks have also done well, the hope of a turnaround. Now, the question is, incrementally at 11,500, if you're going to buy a financial stock, then what should it be?
I mean, it's very difficult to answer it like that, but I think the kind of rally which we've seen in corporate banks, I mean, we don't own it, Axis Bank, but look at the kind of management change that happened. And all financial institutions are defined by the companies, by the people who actually manage them. So we had the insurance company CEO coming into Axis Bank, and that has actually fueled the rally, because he's supposed to be a taskmaster and other things. So we can always argue that these corporate banks had their own problems, but then if there is a management change happening, there's a trend. Right, but then the trend can only go so far. The stock has already gone from 600 to say 750. I'm not recommending it right now, but then you have to sit down with your basic balance sheet analysis and figure out what if these things happen, like he's put out a certain ROE target over the next 2-3 years. He's put on certain NIM targets and spread targets. So you just put them on an Excel sheet, and then you figure out what if all these things happen, where do you land up to? I think everything gets discounted into the price very quickly these days. So in 3 to 4 months, the market tries and discounts 60% of the good that a company would deliver over the next 3 years. But if you cannot catch the move fast, if you cannot catch what's turning around fast, I think you'll always be late to a party. So you have to take it with a pinch of salt, and plus otherwise, if you have missed these things, you back to the standard old names where you make 15, 16, 17%.
So what's the biggest risk to this market now, Basant, as we move into the elections? And you're not allowed to say the election result not going the market's way.
Anuj, the biggest risk is waiting for 10,500 and the Nifty to get back in.
That's a good one. That is a good one. That's something that, I think a lot of people would agree with. Basant, thanks a lot for joining us. It's always good talking to you. And last year you gave us an interesting phrase, Mamta proofing the portfolio. This year you were saying that it's all about, Modi perhaps. So go out and buy. That's the eternal bull. Basant Maheshwari, thanks a lot for joining us. Interesting conversation.
Oh, absolutely. As candid and as interesting as ever. That's